And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning, my futures family, and happy Tuesday, March the 21st. It's officially spring. Maybe starting to feel like it a little bit. It's 35 degrees here. But in the markets, hopefully if you're in the markets, things are going your way already. As always, our focus is going to be on accurate context, good risk management, and remaining patient in our trading. The FOMC meeting, a two-day meeting, starts today. It's got everybody kind of awaiting what's going to happen tomorrow at 1 p.m. Central. I'm hearing rumors here and there that Janet Yellen is going to be speaking today. I don't know why the FOMC meeting is going on. She should just kind of be quiet, I guess. 9 o'clock this morning, existing home sales is due out. That's it for economic numbers as the world awaits the FOMC decision again tomorrow. U.S. stock index futures set to open higher today in what some are saying is a relief rally. Investors take a breath as fears of a broader banking contagion ease. It's quieted down a little bit on that front. Maybe it's not over yet, but maybe the fear of it is. Traders are again now focusing on the FOMC meeting, largely expecting a smaller 25 basis point rise in rates. President of Russia and China are meeting today for the second day, discussing peace talks between Russia and Ukraine. Crude prices have bounced on the easing of economic concerns. We're waiting for the API this afternoon, which is expecting a small 1.4 million barrel draw in crude stocks here in the U.S. EIA shadowing that, due out tomorrow at 9:30 a.m. Central with a 1.4 million barrel draw in crude stocks. So both of them in alignment on what the expectation is going to be. Who knows what it is going to end up being. So VIX had a nice pop to the upside with all this fear going on. It's down about 5.5% this morning, back down to 22.83. It was 26.44 yesterday at this time. The dollar index down off its recent highs here, 103.10, 103.1, I should say. It was 103.4 yesterday at this time, so down a little bit. And the yield on the 10-year a little bit higher this morning at 3.56, 3.43 same time yesterday. So we're going to be checking out these markets, and we're going to be seeing what is, we got to see what we see, right? We got to trade what we see. Biases, while sometimes can be right, can sometimes kill. As always, make sure you hit the lucky like button, share, comment, question, feedback, heckling, and love are always welcome. Please make sure and subscribe to our YouTube channel so you can get notifications when we do go live. Speaking of going live, today we are expected to have the Coach's Playbook. We're going to be talking about some of our favorite divergences and the tools that we use to find those divergences. And unfortunately, I'm not going to be able to make Hogue money today. My apologies. I'm getting some things done in the house here, and don't want any meeting between power tools and puppies. We certainly don't need that. So I have to disassemble things for a while after the prep this morning. And I may be on and off for the next 3 days as we get a few things done. making some improvements, hopefully, for the prep and for Top Step TV, which is coming down the pipe pretty quickly here. So please forgive me if I miss a couple of things, and we will be hopefully back in full order next week. I'll be around, but there may be some things that I'm not going to be able to do if we have JD on the market prep. I know you guys enjoyed seeing him on Friday. We may see him again tomorrow and or Thursday, maybe even into Friday. I'm not sure how things are going to go, but we'll have to see how this plays out. Good morning, everybody. Shaw first in the room, winning the prize. Happy Tuesday. Timothy Marks, good morning. Nasdaq. Steven, John, Jay, Andy, Bill. Andy switched from Trade of 8 to Trading View yesterday, and it's very nice. Well, I'm glad you're enjoying and happy with your decision, of course. Sujit, good morning. Dan Trader, Kevin, good morning. Fred, I apologize again, not going to make Hogue Money today. I did cancel it on the Zoom meeting, but there's nothing I can do about YouTube. But there's no link for it on YouTube, so maybe folks will find things to do. And of course, with the markets opening, of course they're going to find things to do, right? Good morning, Hagel Matters. Will, Jason, Charles, Alejandro, Bear Goes Long. Good morning. Lacey is chilling here next to me for now. Gotta keep her kind of at bay during the day today. It was a fun day yesterday trying to do that. If you watched the market prep yesterday, it was a little bit of a circus going on here. But things are a little bit quieter. We're going to start the day a little bit later, and again, going to make Hogue Money today, so I keep my puppy happy. Good morning, John. Stocks COVID-19. Good morning. Prayers to you. Dr. VJ Stephen. Good morning from sunny Atlanta. Oh, Atlanta. Robert, good morning. RCU. Good morning. First day of spring, the weatherman said. Yes, he did. We'll see how that works out as far as Mother Nature is concerned. Good morning, Urban Cowboy Rooster. Crowing this morning. Good morning to you. Getting a new trading office. I am getting a new trading office. Yes. Hagel Matters, thank you very much. Ashraf, good morning. Yes, in-house trading studio, something like that. Yeah, I'm going to be moving out of my dining room. Any thoughts on going short here? Any ideas? Well, we'll take a look at the charts here. I think there may be kind of an opportunity. We'll take a look here shortly. George Duque, nice to see you again. Leslie, Lee Trevino, good morning. Mario, Columbus. Joe, good morning. Orion, good morning. JT, no make Hogue Money, right. Yes, I do apologize. More coming at you soon, though. More coming at you soon. Columbus and Jay Brayman, good to see you. If you did just pop in, I'm going to announce again, no make Hogue Money today. I've got some things I got to do, and so I'm going to have to miss it. We're going to miss it today. There may be some things that I'm going to be in and out on this week due to some things going on around here, but it's all for the best. I think we're all going to be happy as we move along. So, thinking about looking for a short here, are we, Will? Good morning, Vince. Good morning, David. Always a pleasure to see everybody. If you're new to the market prep, glad you're here. Well, hopefully you're going to find some information that you're going to be able to use today. Again, our focus is always on seeking accurate context. Not always so easy to do, but always thinking about risk management first and remaining patient in our trading. So, let's jump into the charts. I've got the daily in the S&Ps here all queued up, and we've got Will looking for a potential short. Well, we are getting kind of expensive as far as weekly kickoff levels are concerned. Weekly kickoff 40.34. It's a naked TPO point of control. Last one before we really kind of break out above this area. Look at what the market's been doing. I mean, with all of the fear that's going on, we've left excess at the low here on the 13th, excess, excess yesterday. Long shadows at the top, at the bottoms, and short shadows on top. This market is presenting as extremely resilient, if you ask me, with everything that's been going on. We've got fears easing. The June contract, we added 33,000 contracts in open interest on a day that ended to the upside yesterday. Maybe some new buying coming in. We've got a little bit of an upside grind going here, don't we? And it looks like it's likely to continue today, or is it? Volume yesterday in the New York Stock Exchange was actually pretty decent. 5.2 billion shares. Last Friday on expiration was 9.1 billion shares. So we're seeing some decent volume as price continues to try and labor to the upside. I'm for reals is saying be careful of the short here, looking to curl up again. Columbus, 3 days in funded account. Nice job. Third time round. Columbus, good job. Just take your time. Every day starts from zero. Every trade starts from zero. Okay, so we've got the market moving higher. We added some open interest. The expiration happened Friday. Settlement was yesterday. Overall, if you look at the bulletin, it looks like we lost about 400,000 contracts, but a lot of, all of that was the settlement of the March contract. In the June contract, we added almost 34,000 contracts in open interest yesterday. When we're gauging the auction process, volume is important, open interest is important, time is important, participation is important. The futures on the upside never really brings in a lot of volume. What I'm more impressed with is the volume that we saw yesterday in the New York Stock Exchange. We had a lot of volume yesterday. So take a look at the 30-minute chart here. We looking for shorts? Well, we've been putting in higher lows. We got a pretty relatively solid 3 touch point trend line on the bottom here. Maybe not so strong. I've moved this around a little bit here, and we can't really get 3 solid touch points. So I'm going from this high to this high, and we're getting relatively close to the weekly kickoff high, which is kind of an important level where, again, I look for longer time frame traders to need to adjust inventory, maybe not need to, or maybe they want to, or maybe they have to. So these are important areas up here. So if I'm looking for shorts, I may not be too far from an opportunity to do so, but we do have a gap to the upside. We have overnight inventory that is long, and we're kind of approaching the upper trend line of this channel. Now, every trend line, every channel, every level, every good trading opportunity is a zone. There's nothing that's absolute or finite in futures trading. And of course, we have to remember that anything can happen. But if we're looking for an opportunity for a short, well, we haven't been up here for a while. We've been putting in higher highs. We're getting close to an important inflection level. You never know. We may be getting close. We may be getting close. JD, yes, Yellen may be speaking soon. There's a couple that are calling it tentative for 8 o'clock a.m. There's a couple that are calling it tentative for 9 o'clock a.m. We'll try and keep an eye out to see if this actually occurs. Don't see anything here just yet. You may, and if you do, please let us know. All right. So we've got a gap to the upside. We've got overnight longs. Even if the short we're going to be looking for is an unraveling or a reconciliation of all the longs from overnight, it could be a decent opportunity. We've been somewhat cleaning up the naked points of control. We've got one down here that remains down here near weekly kickoff low. Last week's high is in play today. Take a look at the TPO chart. I don't think we're going to get much good information out of this other than the fact that the initial balance was the low of the regular trading hour session. We have excess at the bottom. We've talked about the excess that we see on the daily chart. We're seeing excess at the bottom yesterday. We have a relatively weak high. Well, we're obviously going to be opening above that weak high. We had a late spike here that was kind of rejected, almost a late spike that was rejected on Friday, Monday, Tuesday. Looks like we're going to be perhaps coming up to closer to our weekly kickoff high, which is largely based on this point of control POC, TPO POC up here at 34. So we're already kind of on our way, but if we're looking for shorts, we may be getting close to an area of it. JT is saying resistance at 40.27, 27 right up here. And I'm looking at potential resistance up at 40.34. So you're starting to see maybe some eyeballs up here for opportunity if you are looking for shorts. But again, gap rules state if we can't close the gap relatively early, we look for weakness and opportunities to look for longs. If you can't close the gap relatively early, even a gap close can be supportive. Let's take a look at crude oil now. Crude oil is a little bit of a change perhaps coming on here. Directional trade has fallen into rotational trade, still kind of rollover-ish. We got pretty cheap here yesterday. Didn't get to our swing low we were looking at, which is down in the 62 area. And we've left some excess at the bottom here. Maybe we've gotten a little too short. Looking at this, however, as more of a downside digestion. If we take out Friday's high, there may be a change to that. All right. I think a part of the reason that we're getting this bounce here in crude, of course, as everybody is already saying, is the economic fears have eased a little bit. Okay, poor economy, people buy less gas. Good economy, people buy more gas. So it looks like we may be really falling into an area of balance here. Markets do that. They go directional, they rest. They go directional, they rest. This area of balance is going to be, I think, important for the next leg of this move to the downside if it is, or a break of this move to the downside back higher if that is the case. Pretty decent opportunity on the breakout of this. We know that there is interest in the government purchasing crude oil below $70 to replenish the Strategic Petroleum Reserve. I haven't seen or heard anything about that here as of yet. So, take a look at the 30. We had a late spike yesterday. Here's our late spike. What's a late spike? Late spike is a move at the end of the day that doesn't have time to accept price at a higher level or a lower level, in this case a higher level, over time. So we look to see what happens the next day. Opening flat out above a late spike is the highest possible acceptance of pricing at higher levels. Doesn't mean it has to shoot to the moon. It's just stating that the market is accepting higher levels. Inside the late spike above the base, secondary probability of acceptance of higher pricing, and then opening below the base of the late spike would be rejection of higher pricing. What are we doing? Well, we're overnight long. We've got a gap. We're above the late spike. This is indicating acceptance of higher pricing. Acceptance of higher pricing. So we're still looking at gap rules. We're looking at support all the way down to the base of the late spike, which is 67.18. So this market can go all the way back down here and still be indicating potential acceptance of higher pricing. Do we know that's going to happen? No. Could this thing barrel through that base of the late spike and continue lower? Should something happen? Absolutely. Absolutely. So, second, 40-20. There you go, Rooster. So back to crude. Take a look at the TPO chart. Here's what the late spike looks like on a TPO chart. We have excess, low excess, but excess nonetheless. Late spike, opening above the late spike, acceptance of higher pricing. We've taken out this point of control here. And again, if we close the gap, even if we get to the base of the late spike, which again is 67.18, the market is still primed for opportunities to look for longs. The market can pull all the way back down to that level and still be in the hypothesis that it is accepting higher pricing. Okay, so remember, if anything happens, that changes. IB high or low? No, looked just below the IB low early in the session yesterday and then finished the day higher. The NASDAQ, what a different market. It was so different. Here, I want to just do this for 1 second. Here's the daily and the S&Ps. Here's where the NASDAQ is. Look. Up here. S&Ps are down here. It's a totally different market. How related, but unrelated, it seems like. The NASDAQ, of course, has no banks. The market has been treating the NASDAQ a little bit differently, hasn't it? So now we've got the weekly kickoff in play. It is an opportunity to look for a potential execution. We've got maybe a little bit of a bull flag forming here. We got smaller ranges. Volume's been just okay. We actually lost 6,500 in open interest yesterday. That's the preliminary number. It could change, but of course we are always paying attention to that. So do we put up a bull flag here? Do we open? Are we going to move above this bull flag? We've got last week's high, weekly kickoff high. There's probably some lunkers under the pier here. What else do I have here? Okay, we looked at the dailies. Here's the 30-minute. So if this is our bear flag, and I've pretty much got this trend line pretty much to regular trading hour high, regular trading hour low, except for the fact that we've got 3 good points of contact on this. Doesn't matter now. We've broken out above that level and we're up against the weekly kickoff high. Am I looking for longs? Maybe in all the wrong places, but yes, I'm looking for longs. We're going to be opening with a gap. We're going to be opening above a potential bull flag, maybe up against some resistance here. And again, we're looking for opportunities in under the pier here. I'm calling last week's high and weekly kickoff low, that space between them, as under the pier. A lot of lunkers like to hang under the pier. So we get up there, it's going to be worth your while to throw a line in. Execution is up to you. Gap higher, no close of the gap, opportunities for upside continuation remain. Take a look at the TPO chart. This includes the overnight. Yesterday, IB low for the regular trading hour session. An attempt at a late spike here in the NASDAQ, which didn't really hold, but it looks like we're going to be opening above that attempted late spike. So again, the market is signaling, at least early in the session, that it is accepting prices at higher levels. We've got a gap rules. We always have the opportunity to wait for an inventory adjustment to look for better trade locations for longs if that's what we're looking for. Let's go back to crude oil here. I see Fred's question. Let's see. So Fred is saying the spike low 67.18. The overnight low is 66.90. Do you think the overnight low is too close to the spike base to expect the spike to be supportive? Uh, no. No. The firecracker effect is always a possibility, but I don't think that the fact that the overnight low is this close to the base of the late spike as anything all that important. And it may not even come into play if we do put in some sort of low short of this level and then find the market moving higher. I don't think it wasn't on my radar. It doesn't mean that you're not right, Fred, because believe me, I've been wrong. Just ask my wife. I kid. Retesting settlement is fine, Edward. If you're talking crude oil, settlement is 67.82. It's in the spike. What I don't want to see is acceptance through time below the base of the late spike. So in essence, a value area special situation play would kill the idea that the market is accepting higher pricing. Always a pleasure, Fred. No problemo. So let's look into gold now. And some questions as to why I left the weekly kickoff high in gold so close to the high from last week. Well, 2000 is a psychological barrier. When I saw the market trading above it before the overnight, night before last, I said, all right, well, let's see what happens in regular trading hours. Let's see if we can accept above that in regular trading hours. And we were unable to. As a matter of fact, we brought in some naysayers yesterday. Now, gold is coming into rollover. It's probably going to move to the June contract, right past that May contract to the June contract at the end of the week. So with remembering that we're in rollover, we lost about 6,000. We added about 6,000 yesterday on a pullback. That's not necessarily indicative of a pullback in a healthy upside. A pullback in a healthy upside move, you would lose open interest. We brought in naysayers, and I'm kind of going with that, even though gold is in rollover. We're seeing the market continue to try and push lower today. A lot of this is probably, of course, the fear factor that is easing. We have the dollar kind of leaking to the downside, which would be supportive of gold. But the fear factor, the risk-off mentality, which gold is a flight to quality type of situation, has fallen off. So we're seeing this fear factor probably taking some buying away and bringing some selling into the gold market. So here we go. We have almost a head and shoulders here, right? So we're kind of at the neckline right now. So here was our move night before last above weekly kickoff high, which I severely doubted, but I didn't sell. Yesterday we have a kind of a range-bound day. Weak structure below. We've opened with a gap. I don't think we've closed the gap here just yet. We've already checked into one feature of the weak structure below, and that's the point of control here from Friday. We've got a gap below that. We've got more naked points of control that take us all the way down to weekly kickoff low. Not suggesting that that's possible today, but the market is kind of pulling back a little bit. So gap rules, if we can't close this gap relatively early, and I know that's a subjective term, what the hell does relatively early mean? Maybe it's the first hour or two. Maybe we'll see this market continue to get pushed lower. We do have overnight inventory to the short side, which I'm not seeing as being nervous here just yet. It seems as though their feeling is like that they're going to continue to get paid today. So not looking for longs here, which I'm, again, usually looking for longs in all the wrong places. And I'm going to really just try and I guess remain patient. I don't really see anything that clearly to risk here in gold just yet. Maybe opportunities later. One of the things that we are looking at, which is a possibility, is repair, Fred. We've got a point of control here. We've checked too early. We've got overnight inventory to the short side. What do you suppose happens if our overnight inventory gets nervous? They're going to bring price right back to where the market opened last night, which brings us to the point of control from yesterday. Point of control to point of control, consecutive days, potential repair. Potential repair. Here's the TPO chart. Normal variation trading day. Neutral stance. Used up some ability to facilitate trade here. No gap close. It looks like we've closed the gap. Gap close may be resistant. Acceptance back inside yesterday's range could bring us higher. So a value area special situation play could take us back up through settlement to value high from yesterday. Being unable to accept in a range from yesterday could bring us lower. I mean, there's potential repair down here as well. And there's the ES pop. Things are looking pretty rosy for our equities, aren't they? 14.19, 14.18. Here's the euro, which again, the dollar looking weak. Finally, we're seeing the euro break out above the weekly kickoff high, which has remained for quite some time. That weekly kickoff has been breached. Now are we accepting or are we going to reject it? The U.S. dollar continues to pull off recent highs. The open interest indicates new business came in yesterday, adding 1,900 contracts. Not tremendous. Volume wasn't great, but at least we see that money came into the long side, and they're still getting paid. I would say that the pain is on the shorts here in the euro. Take a look at the 30-minute. Look at the range. Look at the range yesterday. Very small range. No gap close. No real attempt to close the gap after the open yesterday. And we saw a very small range with negative delta of minus 3,300. Negative 3,300 delta on an increase in open interest. What could that be telling us? More aggressive sellers unable to move price in their direction may have found longer time frame buyers. Look what's happening today. If those shorts were still in the market last night and this morning, they're getting smushed. Pain is on the shorts. That pain may now be alleviated while they lick their wounds and look for what's going to happen next. Here's the TPO chart. Look at this. No excess on either side. Although we did have kind of a late spike on Friday. We were unable to close the gap. This gap remains as excess. This gap remains as excess. We start taking out that excess, that's saying something. Initial balance yesterday, the low of the range. Visited it twice. Poor low yesterday, which may be of interest. Look at the 10-year. The 10-year was pretty stiff rejection at weekly kickoff high prior to the open yesterday. We're really falling into range-bound activity. It's been a volatile range-bound area here. It's confused. It's finding balance. Open interest, we lost 6,000, which is largely inert in the 10-year. Oh, short time frame control is what I'm thinking and what I'm seeing. Take a look. range. Got too long yesterday. Well, we took care of that. What are we looking at as far as short time frame levels? Well, yesterday's regular trading hour high was pretty much point of control from Friday. The low yesterday in regular trading hours, pretty much the overnight low. Well, what about the day before? What about Friday? Well, Friday's high, value high from Wednesday. Value low from the range from Wednesday, pretty much there. They're all kind of lining up with visible short time frame levels, and that's the way this market is right now, because again, it's looking for new information. We have shorts, we have a gap. We have to trade gap rules. We have to remember also that the overnight inventory is short and that we are in short time frame control. Little visuals to kind of pick up below here in these naked points of control. Now, if I were trading the 10-year, I wouldn't be trading it today. We have too much important information coming out tomorrow. Here's the TPO. Excess, no excess, excess, no excess, no excess. This market is a nightmare to try and trade. Gap rules, visual targets, net gas, continuation to the downside. What happened yesterday? We added 10,000 in open interest on a down day. Money started coming back into the short side. We're sitting down this morning. We were right at weekly kickoff low. Looks like we're opening below it, which we did. Take a look at the 30. How much cheaper can natural gas get? So we've opened with a gap. Overnight inventory just slightly short. I mean, it's brand new shorts. But we've got a gap here. I'm not going to fight this move. Not going to fight this move, no matter how cheap I think natural gas is. The open interest yesterday, the increase of 10,000 contracts, I know it's in rollover. Tomorrow will probably be in the May contract. But just thinking directionally, weekly kickoff low in play, gap through the weekly kickoff. I don't want to step in front of this market at all. If I traded it, I don't even want to trade this market. It's a widowmaker. So almost a late spike. We're calling it a late spike, opening below the range from yesterday. Through weekly kickoff low. Yeah, that's nuances that are saying don't be long. Don't be long. All right. Yeah, we do have existing home sales coming out here in about half an hour or a little bit more. Don't see Yellen speaking here just yet. I've been wrong. Let's see. No. 9 o'clock, I see her on one schedule. See her on another schedule, tentatively at 8 a.m. Who knows what's going to happen. All right. Well, let's take our deep breath. Stay humble, grateful, creative, and centered in your trading today. Again, I apologize for not being able to present Make Hogue Money today. I'm going to get a lot of things done this week, so we don't have to worry about them moving forward. And I look forward to seeing you for Coach's Playbook, if I can make that. And again, for the reflection, if I can make that. I'm going to be kind of iffy throughout the week this week. So we'll see what happens. And I will look forward to seeing you soon. Get out there and profit today. Every trade starts from zero. And each trade has nothing to do with the last. If you find yourself emotional and fear-based, step away. Make sure you're centered and calm before getting into the marketplace. That brings your little smart trader in your head right up to the front where he can talk to you, and we look for, we don't want to make trading decisions based in fear and emotion. Calm, cool, collected. Trade well today, and I will see you later on, one way or another. Blessings.